Hi, good week to all. This is Kelvin here. Welcome to this week edition of the weekly technical outlook on the major stock indices for the week of 20th of December to 24th of December. So I'll be covering the latest key levels, the trend bias on the SP 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 40 index. So before we start, just we got to be mindful that right now we are coming close, or in fact we are already in the holiday season, where i.e there will be lesser trading activities going on in the global market space, where we could potentially see a thinning out of liquidity condition that could cause more trendless condition in the major stock indices that I covered. Okay, so before we start over here, let's take a look at the disclaimer slides first. Okay, so before we go into the technical analysis, right, or the trend bias and the key levels to actually highlight for you all on the major stock indices, let's take a look at the momentum analysis, okay, across the globe for the major stock indices from US all the way to Europe and Asia. So what we could see is a very contrast performance versus positive, almost close to positive, in fact, all positive its prior week, okay, versus the previous week, which is 13th of December or 17th of December. So what's important last week was actually a very interesting price movement where we start to see initially there was a bit of fear caused by the Federal Reserve meeting with the Fed FOMC. Then thereafter, after the Fed FOMC, the market actually rallied significantly, where the S&P actually rallied to have to close, to have an all-time high closing level on Thursday. But however, right after on which is Wednesday, okay, probably on Wednesday, Wednesday US session. So right after the FOMC meeting, which is on Asia Thursdays from last week on last Thursday during Asia session, all the gains were actually starts to trigger off. And by the time when you hit towards the end of last week, which is 17th of December, whatever gains that was seen on the S&P 500 has been wiped out post FOMC. Okay, so what we could see is a very uncertain environment in the marketplace right now. Number one is definitely is due to the lower liquidity condition where we approach the holiday season, so there will be a lesser volume in the markets. So people are not willing to take on additional position right now that give rise to this whipsaw movement of a huge whipsaw movement. Initially, it was up. Then towards the end of the last week, all gains that were gained were actually wrapped up. And also, this nevertheless, we have this we call it external factor, which is the fear of this Omicron variant that could be more two things because there's still no concrete evidence that's saying that this Omicron variant is less infectious compared to the Delta, and there also could be a possibility that this Omicron variant could be more deadly in terms of some findings that saying that it may not be so effective, or I would say that the current vaccine may not be so effective in preventing this Omicron variant. So, but there's a lot of sketchy information about that. No 100% concrete. So that's kind of give rise to this uncertainty in the marketplace right now. So that you could see that very clearly across the board on a weekly basis. Last week was almost negative. So the worst hit was actually the Hong Kong related or the China related market on the Hang Seng Index, which is down close to 3%, and the China Big Tech is down close to negative 6%. Okay, and overall, right, if you could see the momentum by taking the difference of last week performance and its prior 4 week average also starts to actually thin down as well, or decline as well for all the if you look at the US three benchmark market as the total negative, the S&P 500 and the Nasdaq 100 and the Dow Jones Industrial Average. And what's still kind of still kind of pretty flat or positive is the Nikkei 225 as in the German 40 index, almost unchanged for the German 40 index, the DAX, and a slight positive bias on the Nikkei 225, which is at a positive 1.36%, not that great. And definitely the worst hit was actually the Hong Kong 50, the Hang Seng Index, and the Hang Seng Tech Index, okay, followed by the Big Tech Index as well. Okay, this is actually due to the scare in this technology stock. Why? Because given that their valuation is relatively higher than the rest of the marketplace. Because if you look at the whole of this year, they're the one that is outperforming. example will be Apple. Okay, so given that the higher valuation that is being seen right now, there is definitely they're actually prone of a more turbulent price movement given this uncertainty in the marketplace. Okay, so now quickly going through the technical analysis of the major stock indices that are covered. Okay, let's quickly jump to the S&P 500. So I could see the S&P 500. This is the daily chart, daily chart. So I could see that the major uptrend from 23rd of March low is still intact. Okay, so now it's only this uncertainty part since the high of 22nd of November. So this is on Thursday. So on Thursday, it didn't manage to breach above the high. It tested the high, but didn't have a positive follow through and starts to sell off on Friday. So on Friday, that particular sell off managed to find some support at the 50-day moving average. But however, in today Asia session, there's no positive follow through. In fact, there was a very negative price action in today's Asia session right now. So right now, it's currently trading at the low of the day, the intraday low right now, trading close to it at 46. Okay, so right now, if I could open the uh, where is it? The value. So right now it's trading close to the lower low. Current low is 45.64. Current price is 45.67 right now. So pretty lackluster, or I would say at a negative price reaction right now in today's Asia session. So given given this kind of negative reaction, what we could see potentially, it could be a massive sideway price action between the all-time high, the current all-time high at 46.45, and as well as the recent low of 3rd of December at 44.90 slash 43.70, this region over here. So what we could see potentially is a big sideway movement given the lower liquidity condition that we are expecting this week. And also the RSI now is attempting to retest the current corresponding because the this key corresponding support level at close to the 40% level. So what we have is that last week we have a bullish bias to actually expecting the S&P to actually shape all-time high, which it did on a closing basis, but however, there's no follow through. And after the Fed FOMC meeting on Wednesday, US session, the last 2 days of the weeks, has a negative price reaction that gave up all its post FOMC gains. So given the previous last 2 days of price action, that bullish bias has been kind of negated. So what we could a bit more what I would like to actually have for this week in if I will look everything into perspective, right? If I take into the consideration of what we are seeing right now in the marketplace in terms of this Omicron situation, I would rather turn a neutral stance. Don't want to be so aggressive on the bullish bias anymore. So what we could see is potentially a sideways movement going forward into this week and perhaps even next week as well, given that the liquidity condition has started to thin. So I would say that the Xmas rally or the Christmas rally may be on hold for this year. So it's more of a sideways configuration now. Unless very quickly we have a 4-hour close above 47.44, then we could take us up higher towards that initial expected all-time high resistance level at 47.80 slash 48 figure, then followed by 48.30 slash 48.60. So, however, if we have a 4-hour close below the lower boundary of this sideways range, which is a 44.90, it could take us down to 43.70, which is the 200-day moving average. All right. So now very quickly to the Nasdaq 100. Okay, so on the Nasdaq 100, what we could see right now over here is also pretty negative price action. In fact, it was more negative compared to the S&P 500. Why? Because on Friday, it actually broke below the 200-day moving average. And right now, the Asia price action is also trading close to the Asia session low. Now we are attempting to retest the 3rd of December low, swing low area at 15,700 slash 15,540. So what we could see now is there's a risk if we start to see a breakdown a breakdown below this 15,540, it could take us down towards the 14,450 range, 14,380 range, which is also the 200-day moving average that is capping this major uptrend intact. Okay, the major uptrend I'm referring to is the uptrend that is in place since 23rd of March 2020 low. Okay, so price action is not that great on the Nasdaq 100. So last week we have a bullish bias, right? using a very tightened key medium-term pivotal support for a better risk-reward management perspective at 15,800. So very clearly, 15,800 has been taken down. So what we are expecting now is I'll turn neutral first between 15,540 and 16,440. Okay, between these two neutrality range. So unless we could have a very clear 4-hour close above 16,440, then I could actually kind of validate this or reinstate that bullish bias again for it to retest 16,770, then reach the current all-time high. Then after that, followed by 17,020 levels, 17,030. So, but however, a 4-hour close below this 15,440 would may take us down lower towards 15,290, followed by 14,970, which is confluenced by a bunch of feeble expansion level taken from the top of the current all-time high, the one-time feeble projection level of this previous down move, which is this level, and the 1.236% feeble projection of this previous down move projected from the high of the which is last Friday high or last week high of 16th of December that has a that's unable to have a clear breakout, and also confluence to the much more the previous up move from 4th of October to the current all-time high at 23rd of November, which is the 61.8% retracement and the 76.4% retracement. So it's a clear, very clear, significant support level to watch on these two levels. Now, next will be the Hang Seng or the Hong Kong 50. So the Hong Kong 50, right, very clearly right now there's a break, a 4-hour close below the 23,000 figure level. So what is 23,000 figure level? Is in fact this key support level or long-term key support level that is the long-term circular ascending trend line in place since the great financial crisis low of October 2008 that managed to help previous decline of April 2015 to the low of February 2016 and Jan 2018 to March 2020 low. Okay, and right now it has a breakdown below it. So definitely this is a key long-term pivotal support level. So we need to actually say that, hey, there'll be a risk of a multi-month decline. Yes, there is. But to increase this risk of a multi-month decline, you need to have a weekly close below 23,100 level because the week hasn't ended yet. But if let's say if this week it managed to reverse up towards the end of the week and close back at 23,100 level. So what we could say that multi-month, that multi-month of bearish move on the Hang Seng or the Hong Kong 50 is likely to be on hold again. But however, from a shorter term perspective for this week, we could actually validate a down move, a very short term down move as to actually retest this support level. Okay, so before I talk about the support level again, let's bear in mind what is the resistance level to watch to maintain this potential short-term down move for this week. So resistance level to watch, which is the medium-term pivotal support that I have for this week, will be at 23,800 level. So what is 23,800 level? Is in fact the former support level, the former former support level of this bunch of congestion over here, previously taken out and but failure to have a momentum, and last week it did a breakthrough breakdown it, and thereafter price just going lower and lower. Okay, so definitely this is a key level to watch to maintain this short-term momentum, short-term downside momentum. So as long as this 23,800 holds, we may start to see a further downside towards 22,450, followed by 22,100 slash 22,000 21,700. So what's this level? In fact, it's a confluence of feeble expansion level and as well as this lower boundary of this major expanding wedge configuration that is in place since 18th of February 2021 high, which is so the 52-week high at this level. So if we could have a 4-hour close above 23,800, then we may start to see a push up again towards the top of that range, towards the expanding range configuration range on the upper or towards the upper limit. So the first resistance level it will be at 24,450, then followed by 25,800, which is this kind of a descending trendline resistance in place since 11 August 2020 high that kept previous two rebound on early September and as well as late October. Okay, so yeah, so turning bearish at least in the short term for this week on the Hong Kong 50 index, given the current negative configuration that we are seeing right now. So on the Nikkei 225 or the Japan 225. Still recall that the Japan 225 last week, we are saying that it's still evolving within a current 4-week symmetrical triangle range configuration, which indeed true, it's still stuck in this range over here since the high of 14th of September. Okay, so this high also corresponds to the 16th of February, the 16th Feb high, which is close to a 30-year high that didn't have a proper breakthrough on September, which is at 30,716 resistance, the major range resistance. So the major range support at the bottom right now will be at this 26,880 slash 27,500, which is the lower boundary of this symmetrical triangle range resistance over here. Okay, so last week, right, this is on the daily chart. So on the forward chart, last week we have a key minimum pivotal support at 27,500 and intermediate support at 28,225. So what I could see that this 28,225 has been taken out today, this Asia session this morning, very clearly on the downside. So in order to maintain that bullish bias, I still keep that bullish bias, which is as long as this symmetrical triangle support holds at 27,500. But right now, I added on an upside trigger level. That means the price action now got to reintegrate above this bearish breakdown that was actually seen right in today's Asia session. That means price action got to go back above this level, 28,225, to actually give me a more confident for a bounce to retest the upper limit of this symmetrical triangle, now acting as a resistance at 29,450. So if you have the 4-hour close below this level, then we could see a retest of that major range resistance that I highlight on the daily chart, which is at 26,880 level. Okay, now quickly to the German 40. So the German 40 last Friday, right, it managed, this is the daily chart. Okay, so on last Friday, it managed to help above the 50-day moving average kind of test. Then right now in today's Asia session, it actually have a breakdown again. So kind of negative vibes inside this German 40 index right now. So there's a possibility that it could actually see further inch down to retest this major range resistance or major range support level, pardon me, major range support level that is in place since 13th of May 2021 low, which is at 14,800, that managed to hold the low of 6th of October before it shaped a fresh all-time high towards the mid of November this year. So definitely this is an important range support level to watch if price were to actually from here starts to shape further weakness. So what we have over here is that given this kind of current situation right now, I would rather turn neutral rather than bullish. So neutral between 14,800 and the 8th of December swing high, which is at 15,860. Okay, so thereafter, after that, it started to shape a series of lower high. So what we could see is as long as this level is being kept, right, 15,860 on the upside, we may start to see kind of a messy sideways movement for the German 40 index as well. So unless it could have a 4-hour close above 15,860, then I could revalidate or reinsert my bullish bias to retest the current all-time high level at 16,300 level, at least in the short to medium term. So, but however, if we start to see a bearish breakdown below 14,800, a 4-hour close below 14,800, it could actually extend this bearish bias or a downtrend or mount towards 14,600, then thereafter by 14,400 slash 14,330 level. Okay, so all in all, what we could see right now is there is no clear direction at the moment in time, whereas no clear upside direction. So the Xmas rally might be more or less been delayed right now, given the last 2 weeks of negative price action that was seen in the global indices, the last 2 days of the last week, pardon me. And given such situation right now, it may start to see a retest of that current lower boundary of a 3 to 4 week range that is in place, as seen in the global market space, the global stock indices. But however, kind of negative for the for the Hong Kong 50 index because it has a 4-hour close below this key medium-term pivotal support that I highlighted last week, which is 23,000 level. So with that in mind over here is that we are turning neutral for all the indices, and with the Hong Kong 50, we are turning a short-term bearish bias, at least for this week. So with that in mind, do stay safe, and I wish you all a Merry Christmas, and I'll see you all next in my next video.